Alright, okay, what we're going to talk about tonight is trading in probabilities. So giving ourselves the best probability of making winning trades, how we approach the markets, and what's going to work for us as traders. Now, before I start, as always, I have to read a risk warning. Now, spread betting and CFD trading both carry a high level of risk to your capital, with the possibility of losing more than your initial investment. These products might be suitable for all investors and are only intended for people over the age of 18. Please ensure you're fully aware of the risks involved and, if necessary, seek independent financial advice. Now again, it's educational only. The content of the webinar is the personal opinion of the moderator, not InterTrade.com. The content does not constitute financial, investment or tax advice. You're advised to discuss your specific requirements with an independent financial advisor prior to entering any bet. InterTrade.com is not responsible and disclaims all and any liability for the content or comments during this session. So again, what we're talking about today is trading in probabilities. Now we break trading down. It's very easy that when we hear the term spread betting to think that we're having a bit of a punt, we're having a bit of a gamble. The way I've always approached trading and the way I teach it and the way these seminars are all structured is that trading is about as far away from gambling as we can get. Now what we need to do is make sure our mentality, the way we look at the data, the way we look at the markets and the way we trade is as far away from gambling as we can get physically. Now again, we're taking on risk and we're putting money on to make more money, but it doesn't mean that we have to look at it in a gambling way. So when we do look at trading, we're looking at all the things, all the analysis, all the things we can control. So things we can control is what we know, our levels, the amount of research we've done, the way we approach the markets and our mental state and our physical state, and all the things that when you sit down to trade that give you the edge over other traders. You make sure you've ticked every single box, and when you press that button to buy and sell, you're giving yourself every opportunity to get on side and to take profit out of a trade. Now the main thing I always teach, and I always try and let people in, it's not a trade secret, but if you don't have a plan, then you're really planning to fail. Now it sounds kind of corny, and I don't like saying these kind of cheesy phrases too often, but from my experience and the way I was taught to trade and the way I've managed some of the biggest traders, in the city, in the world, even the biggest trader has always got some sort of plan. So again, we don't have to make this too complicated. We don't have to make it war and peace. Things we look at to do is, put something physical in front of us that we can refer to. And remember, a lot happens in the markets simultaneously, and we can be looking at one market while something else is happening. So as long as we know where we stand, where the levels that we're interested in are, the products that we're interested in are, the figures that we know we can trade, all these different things, if we can put them down in front of us, we're already giving ourselves an advantage, that little bit of an edge over other traders. So again, when we talk about trading, it really is all about repetition. Carry on doing all the things that always work for us, that are right for us, and then stripping out what's not working. Again, some of the biggest lessons in life we learn is by losing, by getting beat. So if we can build that into our trading plan and make sure we don't do that again, and just replicate the positive things, the things that actually did work for us, then we're going to be better for it. So again, it's all about finding out what does work for us, what doesn't work for us, and then making sure we've got the right balance. And this in its very nature is giving us a probable outcome that will do better with this approach than we would do without this approach. There's 3 steps, really, that I believe that we can make trading work for us. Now again, there are a lot of things happening simultaneously, as I've said. And what we can only do as human beings, and also as traders, is concentrate on what we can control. So things we can control are when we press the button, the size we use, how we're feeling, and how we prepare. I cannot stress this enough. The point 1, preparation. Yep. What are you going to trade? What are your levels? What's your bias? These are the absolutely fundamental parts of trading. Preparation can come in different forms. And when I talk about preparation and trading plans, people tend to kind of switch off. It's like, well, I did that kind of stuff at school. I made a plan for this, etc., etc. I don't have to do that now. It's my money. I can do what I want. That's fine. We can all do what we want. That's within our power. But if you want to want to start a business, you want to open a cake shop or, I don't know, anything random, a pet store, you'd look and you try and make some sort of business plan for, what you're going to do, how much space you need, how many, units you need to produce, or etc., etc., all these kind of things, and you make a business plan. So a trading plan, your preparation, is just some framework. It's just basically what the things you need to look at on a daily basis or per your trading session, or what you think is going to work for you, or what mainly isn't going to work for you. So it doesn't have to be complicated. And again, if you're doing it for you and you set these rules in place, i.e. your stops, if you put a trade on, you're going to stop when it goes 10, 15 ticks offside, that's your rule. You can make the rules however you like. You can also break them. But at least you've got them in place. It gives us something to kind of to base our trading day on. So point 2, what are your expectations? Where are your outs? Where's your stops? Where's the market going to go? Now again, if you look at the markets in the last few months, the volatility and the amount of ticks that a daily range has greatly increased. Back, if you were trading 2 or 3 years back, you could quite happily trade the FTSE, for instance, and put a 10-tick stop in. Another range for a day was maybe 55 ticks, 60 ticks. But now, where the volatility is, and because there's not that much volume, markets can overextend and trade 2, 3, 4 points in a day. So again, if you're looking to make 10 ticks as a stop and make 20 ticks out of that particular position, well, that might not be suitable in these market conditions. You might have to take more risk on in order to make more stops, or trade less size and average into positions so you can filter out the noise and take positions over certain prices rather than being very price specific. So point 3, how are you feeling? Are you ready to trade and win, or are you just hoping? This is more the kind of psychology, the more kind of how your mental state is and how your physical state is. We'd be surprised how many times people neglect this and just log on and just trade. And I've seen it over the years. And again, with some very, 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 very big traders, and then a lot of small traders. We're not always on top of our game. We're not always ready to trade. There are many different factors in life that make us who we are and how we approach the markets. But we have to be aware of how we are before we actually trade, and how strong we are mentally and how prepared we are to physically take on the markets. Because if you're not ready for it, I guarantee somebody is. And what's the likelihood they're going to beat you? And trading is a game in a way, and it is a battle. But again, it's all what you can control, what's right for you, how you approach things. So preparation, the key point. Again, without making it too long, these are real things that you can do that might take between 5 and 10 minutes. Please, just don't just log on and trade. Don't just open your PC up, have a quick flick through Bloomberg and go, right, okay, I'm going to buy the FTSE today. I'm going to sell a DAX, whatever. It doesn't really matter. You can't just log on and trade. You have to have at least done the bare essentials. Done some sort of fundamental or technical analysis. Look at things like the currency pairs. Now remember, if you're trading indices or bonds, overnight all sorts of things have happened. So again, the currency pairs have been trading overnight. So look what's happened. With the euro, with the dollar, overseas markets, the yen. Check overnight news. Is anything that's going to happen overnight in the emerging markets in the US that might affect the UK or the European Open? 2 minutes. Very, very easy to do. So what data is coming out today? What figures? Who's speaking? Do we know who the speakers are? Okay, so for a long time, Jean-Claude Trichet was the head of the ECB. Not anymore. So when he says stuff, the markets don't listen as closely. So are we aware of who's speaking, what they're saying, how they affect market conditions, how they affect government policy? So know who the people of the ECB are. Know who the people from the Fed are. Know your Bernankes, from the people that move markets to the people that don't. When they're speaking, what they're likely to say. What's the market sentiment? What are people expecting to hear? And people equal the markets. Okay? So what do you expect? What's your opinion? To be honest, your opinion counts just as much as anybody else's. Remember, you're trading your own money. So you're not trading banks' money. You're not trading clients' money. You're trading your own physical money. So whatever you think, whatever you expect and what your opinion is, that's completely valid, 100% valid. We have to remember this. So again, are the markets trading technically? Right now, the volumes are very low and get spoofed quite easily on market rumours or little bits of fundamental news. So are the markets trending in a way we understand? Are we in a technical pattern? Are we in a trend, an uptrend, a downtrend? Again, be aware of your levels, your targets. Where could the market go on the upside and the downside? Yeah, be market neutral. We can make money by selling things just as much as we can with buying them. And also, there's a real value in weekend analysis. For a lot of guys like yourselves and myself that are intraday traders, that you get to a Friday afternoon, market's quieting down, people liquidate positions. So really, over the weekend, you've got some free time. The markets are closed, you can't actually trade. So this is a real time to, say what did happen over the last week and what's going to happen in the week coming. So again, when we talk about weekend analysis, it's really important to have some downtime. So when you have traded during the week and you've got everything else going on, you might trade full-time, you might trade part-time. But again, when you're involved in the markets, it's pretty much all-consuming. But when the markets are closed, there's nothing you can do. So you can look at things absolutely objectively. Now, hopefully, or what I'd recommend if you are a starter trader or just fairly new in your trading career, I wouldn't hold overnight positions. The way the markets move at the minute, there's enough money to be had by everybody in intraday moves. Holding overnight positions, trust me, leads to sleepless nights, stress, and sometimes it gives you a false hope, or I don't really know the best way to describe it. Sometimes you hold positions when you know they're wrong, but something could happen, something could get you out of it. Whereas if we stick to a plan and we intraday trade, we know when the market opens, where it closes, and that the likely range we're going to be in. Okay, so again, if you're not looking at overnight positions, you can look at charts, look at your positions, and objectively look at what the fundamentals and what the actual technical charts are telling you. Then you can go away and you can plan for the week ahead. And this is dead easy to do. It really is. It's something that I teach, and some of the sites I run, like TraderMaker, for instance, I'll tell you over the next week what figures are coming out, and I'll tell you what's important and what's not. Now, it's not just because I'm telling you, as in who I am. I'm telling you because it's a fact. I know what's moving the markets. I know what figures the big banks look at, the economists look at, and the people that trade the markets look at. So, there could be 10, 20, 30 figures out in a month. There's only maybe 4 or 5 that really move the markets. Now, again, if you ever tuned into my live trading sessions, I'll show you what figures move the markets, and I'll trade them live in front of you and make money. Now, again, it's not because it's something to show off about. It's just because having done your research, and I pick figures every month that I know will move the markets. So if the markets move, we've got a chance to make money. We might get in a Tuesday afternoon, and the markets aren't going to move, but we're still trying to buy low, sell high, etc., etc., when there's nothing really going on. But if we channel our energies into what we know is going to happen and what's going to move the markets, like once a month, non-farm payrolls, even if it comes in line, the markets will move because people are positioned either way. So if the non-farm payroll is going to come out on a Friday, as it does every first Friday within the month, should I say, that we know that it's going to move the market. So Friday morning, why bother trading? Why bother wasting our bullets when we can wait for non-farm payroll and use all that capacity and balance to trade a good opportunity? So these are the simple things, just by looking at the data, what's out there available to anybody, and making a very basic plan, can make you a better trader. Okay? So again, take a stance. You don't have to. Some of the best traders I know are always market neutral. They don't care if it goes up, they don't care if it goes down. They just get on the moves. But other people feel the need to know if things are going up, or feel a need to know if they're going down. That's fine. But that's again back to you. When we're trading in probabilities, trade with things that work for you. If you're a counter-trend trader, go with that. If you're a trend trader, go with that. If you're market neutral and have no bias either, make sure you know. If people are bearish and you're thinking, nonsense, it's going to go up, then that's your opinion. Go with it. The probable outcome is, if you think it's bullish and you've done your research and you're prepared, that the market's going to go up and you're going to be confident and trade with it and probably make money. So again, be firm in your opinions, but be flexible. I mean, remember, we're talking a really rapid, liquid, changing environment. You know, we're not always going to be right, but conversely, or other people won't always be right. So again, when we think about the markets, remember we're just trading with other people, other people's ideas, opinions, money, banks, funds, all these kind of things, and we're all just trying to get the edge and trade. It's not to say who's right or wrong. I mean, trading, I was always told, was a game, and money's a way of keeping score. I don't see it like that. The way I see trading is that we've got all our ability and all the things we have in our armory to take on the markets, and we put in what we can afford and how we can trade. And if we win, we win. If we don't, we retreat. We run away as quick as we can, you know, waving the flag. There's nothing wrong with that. If you can say you're wrong and get out of a trade for a reasonable loss or where your stop is, you're already 10 times the trader of most of the people I've managed in my entire life. Being able to admit you're wrong and get out for a reasonable loss, it's gold dust. If you can do that and stick to it, you will, I guarantee, be a much, much better trader than somebody that just talks about the wins and that time that I got, you know, a point winner, etc., etc. Cut your losses small, because the market will always give you more than one opportunity to get back in if you're right. So again, use a sliding scale of importance for figures, or listen to certain experts. You know, find out who's in tune with you. We all read different papers. Some people like the Sun, the Times, the Telegraph. There are different market commentators. Find out who works for you, who's in tune with your thinking, and listen to them. Again, ask me. I'll give you my email address. Takes 2 minutes to send an email. Hi Steve, this is my view on, you know, consumer sentiment. What do you think? And I'll tell you. Again, it's all about building your opinion based on other people you trust, respect, and think. Because that's what everyone else is doing, to be honest. So really an overview. If you can say you've done 80% of these points, then I'd say you're prepared. Now remember, we're not gambling. This is trading. So you've done your preparation. I always see it that you've earned your right to trade. And again, that's another self-empowering thing. If you think you've gone away, you've read some good articles, you know what's happening in the markets, you're not just logging on and buying and selling for the sake of it, you've done your research, your fundamentals and your technicals, then you've earned the right to trade. Now, again, it's your money, you're the trader, you can do whatever you want. All I'm saying is, you know, it's dead easy as human beings and people to trick ourselves, to think we've put the effort in, and maybe we've not. But who are we really lying to? We're trading our money, we're trading our styles. So that's what we need to stick to, that belief that we've at least done the bare minimum to allow us to log on and trade. So again, once you're ready to trade, you should already know you're out. That's the key thing for me. That once you've done all your analysis, you've done all the research you can, and you think, I'm going to put this trade on, but have a physical stop or a mental stop, or write it down that if I am wrong, I'm going to get out at 10, 15, 20 ticks, whatever, a proportion of your capital, whatever. But if you already know where you're going to get out and you stick to that, trust me, you're going to make a lot more money by having that policy than if you don't. So your exit point. So putting the trading point, putting the trade on is quite easy, to be honest. I mean, the exit is the real part of trading. So this is where trading in probabilities really comes in, and you can break it down into these 3 parts and really analyze. You know, what's really the factors involved. So what's the market done? Okay, so what is it likely to do? So we always look at things in history to tell us what's going to happen in the future. So if you're trading the DAX and it went 2 point range yesterday, what's it likely to do today? Is it going to move 50 ticks, or is it going to move another 2 points? So again, this is where you look at the previous day, week, month's trading. Put all these things together and then ask yourself these questions. Again, I mean, am I trading within what I can physically do? If I put a 10 tick stop in, will I always get stopped out because the markets are winging around and moving 2 points every session? So again, these are the things you have to look at and build them into your trading plan, build them into how you press the trade. Because if the markets are moving and you don't understand why, or they're moving too volatile, or you keep getting stopped out, it's either because your entry point's wrong or your stop is too tight. So these are the things you need to adapt and make sure you're trading your plan within what the market is actually physically doing. So again, the other point is, are you going with the trend? Are you going with it or you counter trend? And the trend generally is your friend. I'd love to say that counter trend trading works. I've tried it for a long time. I can tell you, it didn't. And, over my career, money's a way I've kept score. And when I've gone counter trend, my biggest trades, indeed, have been counter trend. I've made the most money. But my biggest trading sessions, trading counter trend, have been my biggest losses. So pick the bones out of that. Again, we have to be making sure that we're looking at all the different ways of trading, different styles. And whatever works one time, it isn't guaranteed to work the other. So we have to be adaptable. We have to move with the markets, and we have to move with what other traders are doing. So another thing is, have you traded this level before? What happened? I think you'll find, hopefully you'll find, that if you trade within a certain parameter, certain rules, and certain levels, that the same levels always get hit. On support or resistance, they're always a point of attraction. So it's always worth writing key levels down, and you'll find yourself always trading around these levels. So again, if we're looking for peaks, troughs, looking for highs and lows, they generally coincide with other technicals. So make sure you write them down, because it's just that visual trigger that might give you the extra edge, that you think, yes, this level's been hit before, it bounced 3 times, so it's either going to bounce or break through. So you might be looking for a trending day, and it breaks through, you go for a counter trend, and you make good money, but just by knowing what that level is, that other people are looking at it too. So remember, if we're trading in probabilities, we always have to do what's right. So this is a really, really bog standard example. As we see here, we have a trend channel. So the trend channel is 2 parallel lines indicating we have a bullish move. So in a bullish move, what do? When it goes low, people are going to buy. So buy low, sell high. Don't get greedy. Don't try to sell the tops. If we're going up, buy where we can, buy some value, and go with the trend. Okay, so that's trading in probabilities. The market has told us here, 1, 2, 3, 4 points at the beginning of the graph, that we're in that trend channel. So every time it hits that line on the bottom and doesn't break through with any significance, we buy. That's buying value. When it hits the top, we sell it for our profit. If it breaks through, the trend is broken, we try another trade. But this is the key to trading, finding out the rules of the game and then playing within it. And playing in the way we can understand. So if it is bullish, and we know that people want to buy, look for a low point, look for other indicators that back up that is a low, look for buying momentum to come back into the market, and look for things like your RSI and your Bollinger Bands. And when they're low, we know it's going to go up, buy. And don't get out until we've seen or the market's proved that we're actually wrong. And that's a really key point. That's what's going to make you a much, much better trader and give you the confidence to stay in moves. That we buy it and it goes up slightly and doesn't retrace and come back, we know we're right. So we have to almost be brave in our conviction and keep on until we hit another indicator that we've already identified, this being the top of the trend channel. So when I said the trend is your friend, very cheesy, and for a long time, when I was a very young trader, I didn't believe this, and I would go out my way sometimes to prove people wrong. The trend's not your friend. Very painful and very expensive lesson to learn, to be honest, until some very experienced traders sat me down and told me a lot of life lessons and things they'd learned over the years. And no, I can safely say the trend is your friend. Don't always have to go with the trend. We don't always have to believe other people's view of a trend. But if things are going up and they have the volume and they have the momentum behind them, this is going to help you as a trader. So the market's going up and people think it's going to go up. That's market sentiment. Let's jump on board with that. Let's embrace it. That's good. That's great. If market is negative and going down, that's also great. Remember, we can buy and sell. So we can make money. Doesn't matter. Even in a sideways market, we can still find a top and a bottom. Again, sell high, buy low. As long as we've identified where the extremities of the market or that trading period are going to be. So again, take an example of the bullish trend. What's the most likely outcome? What's the most probable outcome? If you're trading in probabilities, we've identified it's a bearish trend, a bullish trend, it's going up, and we've identified a very, very strong point of support, and it mirrors the point of resistance. So, okay, what does that tell us? People are going to be buying. So look for downward levels, things that corroborate, and things that are on our radar, low down, and buy them. People will sell for profit. So sell for profit and also go short because they know the market is buying. So when we get high, people will take profit. So again, look for the downward moves as entry points. These are people getting out when you know event is going to go back in. And don't get greedy. Just because you know where it might go to, don't start selling it and trying to make money on both sides of it. Keep to one side. Keep to conviction. I'm not saying you can, again, I'm not saying you can't do these things. Of course you can. It's the buy low, sell high. But you can't always make money both ways, and you can't always be in the zone both ways. So don't try and take too much out of a trade. If you've bought it and you know exactly or within reason where it's going to go, and you make money of that trade, bang, that's great. Bank that profit, and then go away and wait for the market to sell off, and repeat it. Do the things that have made you money from that trade. Again, it's all about the self-fulfilling prophecy. If you do things that keep working, they will continue to work. So remember, the probability principles. If you identify as a bullish trend, look to buy, don't sell. Don't be greedy, okay? Don't try and scalp in between. Don't try and pick the highs and lows. If it's an upwards trend, if you identify it, buy. Yep. And again, if you found that downside level, hold it. Please, hold it. If you identified you right, don't try and take 5, 10 ticks out of it. Hold it. Hold it within a reasonable range that you've already identified. And again, this is where your preparation comes in. Know how far the market can move and how quick. So point 3, how are you feeling? Now this is a point that's quite undervalued by people. Now again, we're all humans. We all have busy lives and we all have different agendas and different things on the go. So you can ask yourself, these certain questions. Are you confident? Are you alert? Little things like, have you eaten? Or have you traded this before? These are all the things that I'm covered more in the kind of trading psychology module. But these are all the things, again, that you have to look at, and these easy questions you can ask yourself. How do you feel? Is this a trade where you're thinking, yeah, I can see some good profits out of this trade. Yeah, I've done my research. This particular economist thinks this as well. So yeah, I'm going to make some good money here. Or you're kind of thinking, I'm a bit apprehensive actually. I'm not particularly sure. I'd like it to work, but I don't know. And then are you alert? Again, this goes back to don't just log on and trade. I mean, when I traded in the city, I was in the office at 7 a.m., which meant I had to get up at 5 a.m. That's the price you pay. That's what you do. That's the rules. You have to be prepared and you have to be ready for the markets to open. So if I'm doing things like that and making what I make a day, and you just turn on your PC, on your spread betting platform, and at 2:30 in the afternoon and go, yeah, I'll buy some of this, they look cheap. Are you really prepared? Are you really in the right mental state to take on people that have been sat there for a long time? Or people that have done the real analysis and research? Or not? So again, if you traded like this before, there's a little thing called trading in the zone, where you can't seem to do wrong. Every trade you do is right. Doesn't mean you're a trading god overnight. It just means you've done these things. You've done the preparation, and it's all working out for you. All these things we have to look at. We've all, in our trading careers, no matter how short they are, experienced most of these things. But it's being able to identify these things and work upon them and replicate them that's going to make us a better trader. And there really are little things, to be honest. They're just little things. But the actual probable outcome of your success by noticing these little things and working with people like myself and other people are going to give you the edge. And it's not just me telling you, because I want you to believe me and trade more. And it's because I've done it. I've done it myself as a beginner trader. I've done it myself as a professional trader. I've done it myself as I've managed hundreds of huge traders. I've done it. I've seen it. It is the truth. So again, we'll talk about probabilities and risk reward. So once we've identified the probable success of this winning trade, You have to make sure you've considered the risk. So this works in two ways, to be honest. So the first one is, have you risked sufficient to warrant the trade for a start? This might sound a bit backwards, but sometimes, you need to put more on to a trade when you're certain of it than when well, that's not really the right way to put it. Sometimes we don't use our capital sufficiently. We just trade because we're a little bit frightened, we're not entirely confident, so what we do is we put small size on and hope it goes 10 times as far as we want. Sometimes we know it's going up, so take 50% of your capital and put it on, and then again try and take less moves on more size. If you know where it's going to go, you know it's going to go up, then buy 50% of your capital and take 10 ticks, rather than trade 1% of your capital and run it 100 ticks. That's all about risk reward and the probabilities of risk reward. Okay, use your capital. When you write, use as much as you can within reason and a structured risk strategy, to make the most of your money. The more you trade small size and punt it, the more you're going to be a gambler. If you think, no, I'm right, this is what we're going to do, 35% of my capital on this one trade for 10 ticks, take 50% out, done. You're going to make much more money trading that way than just hoping things are going to go a very long way, and a long way on the side. Okay, so can you have held the trade longer? So many times people tell me, well, it started to come back, so I got out of the trade, and then I wasn't sure. If you're right, stick to your commitment. There's nothing wrong with taking profit out of an onside trade, but conversely, there's nothing wrong with scaling in to an onside trade. If you're right, buy more or sell more. That's the rules of the game. That's your prerogative as a trader. If you're right, make sure you're doubly right. Okay, so risk is the key to trading, to be honest. If you keep a tight risk strategy, the probability is that you're going to have more winning trades than losing trades. But even if you have more losing trades than winning trades, if your stop is tight, the probability is that you're going to have more money in the account than you are at the end. If you let things go too far offside that you can't, we can't handle, we're going to get out for a loss and lose more money. Alright guys, I've got a couple of questions coming through, so I was going to save that to the end, but I'll just answer these now. So yes, the webcast is available in future. All the webcasts I do are recorded, so if you log on to the Omnovia portal as we did before, and just click on the top right tab that says recorded, you can actually re-go through this presentation. So hopefully that answers both of your questions. Again, I repeat these presentations once a month. You can also watch them in FX Street. I'm doing a lot of presentations for them at the minute. I'm doing a really, I'm quite privileged to be doing quite a big presentation on the in February, on the 16th. I'll be the only presenter on FX Street for 3 hours on the 16th of February. And we're talking about all these things I've talked about, how to get a trading plan, why it's important. And this is part of a larger course that I'm rolling out, how to trade for a living. 10 modules of all the things you need to know to trade for a living. So I will give you the 2 first modules for free. And that will be on FX Street. But I'll give you all the details of these things later. Everything I do is recorded. Again, I'm always online. I'll give you my email address. I'm always accountable. And that's why I'm different from most people you might listen to. Because I'll put this into practice. And I'll physically trade live with my money and show you. So again, that's how I build these things up. And again, it's all from personal experience. I feel your pain. I've been through everything you've been through 10 times over. So I try and tell you things from my personal experience. So again, we're talking about risk reward. It's a question I get all the time. And I just want to find, I should by now be able to have an answer to, but I don't, to be honest. I don't know because I don't know enough about individual people. Risk reward is very, very different for different people. So we're talking about risk reward. If I say to you, and I do, I know people that have horses, this horse is guaranteed to win, no questions asked, 10 to 1. So if you put £10 of that, you think to yourself, well, that's a worthwhile bet, I'll take that. And if I came back to you, a little bit later on in the day, and said, well, it's actually 3 to 1. Well, it's not quite as exciting, but I'll probably still take the bet. And what about 1 to 3? So, okay, I've got about £3 on to get 1 back. Not so enticing. So when you're trading, we talk about the offside rule. If you're looking to make £1,000 profit, Why on earth would you let a trade go £3,000 offside? What value is in that to you? You're taking all that stress on, all that risk on, and the possibility of closing out for a £3,000 loss to make £1,000. It has to be the other way around. This is where cutting your losses, yeah, and having a small stop is really paramount. Because you might get it wrong 2 or 3 times. If that loss is £20, £20, £20, and you make £500, you're still in the game, you're still up. If that loss is £1,000, £1,000, you make £1,000, you're £2,000 down. So this is really, really important. And I'll tell you again, it took me a long time to learn this. I was great at making money. First ever trade I put on, I made money. Good money. And it was like, yeah, I'm it. I've done it. I'm brilliant. I'm going to make as much money as you could possibly imagine in my first day. Great. Then I put that one trade on, I made the money, stuck to all my rules, it was great. For the next 5 days, I lost money. Only a little bit at a time, but, you know, again, by the end of it, in the week, from the first day, the first trade, the first time I'd ever put a trade on, so let's call it, I don't know, £500. Then the next day I lost 200, then 100, then 200, then 300. So, in the grand scheme of things, after cost, I was £300 down. After having my first ever trade of winner. But that's trading. That's what we do. That's the environment. If we could be more structured and be more rigid in our stops and say, okay, I made £500 the first day, so the second day I won't lose more than 100, won't lose more than 50 perhaps. Lost more than 50, we get out. Or we lost 50, that's fine. Still 450 in the pot. Then the next day you try and make your 50 back. Okay, I've made that back, so I'm back to where I originally started. You might make 50 more. Build that into the pot. Might see a good figure. Oh, we did okay. We made 200 off of that. Brilliant. And when you add it up at the end of the week, you're in profit. Yeah? You have to remember the losers just as much as remember the winners. That's what makes us traders, not bettors. If you ask any punter, and I live in Gibraltar, there's more betting firms here than anywhere in the world. If I ask any punter how much they're up, I guarantee, and you probably have heard this yourselves, I'm flat. I'm about even. They don't know. They don't know. If I ask a trader how much he's up or down on the week, he'll tell me to the pound. That's the difference between trading and punting. Yeah, that's the probability. The probability is if you know where you are, what you've got to spend and what you've got to trade with, you're going to be a lot tighter than someone that says, yeah, put a few pounds in this machine or put £10 on that horse. They don't really know. And that's the real difference, guys. I can't stress that enough. So when people ask me again, what's a correct risk reward? I don't know. As a rule of thumb, I'd say 1 to 2. If you've got to try and make £2,000 or £200, risk 1,000, risk 100. Keep it in perspective. So translate into trading terms. If you're trying to make 60 ticks, your stop should be 20 or 30 pips from entry. That's a bog standard risk reward. Again, when you go further past that, it becomes more difficult to control. If you keep it too tight, then you risk losing money and getting stopped out too easily. It's not easy, and you have to find your own. You really do. And that just comes through experience trading, and then having your plan, but also making a trading log and working it out in a methodical manner, what you made and lost on each trade, and what's working and what isn't. Very important, though. So in conclusion, just in life, there are no certainties, apart from death and taxes, my favourite quote. Trading's no difference. We're not gambling. We're using the tools, analysis, and instinct to predict market moves. We're not just taking a punt. What separates us from gambling is our ability to manage ourselves and manage the risk and take advantage from this. Knowing when we're wrong and get out, knowing when we're right and staying in, even doubling up. So again, if we look at the most probable outcome, you'll be doing the same as other people. Markets are self-fulfilling. If there's a bullish trend, people are buying, you should be buying. Do what the market's doing. Yep, and add to your success. This will add to your trading success if you think and approach the markets in this way. Excuse me. Alright guys, well any questions, anything you'd like to ask? I'll put my email address on the screen now, so anyone can ask me things in private or confidentially. I know people don't always like to speak on the chat window. Again, if you just look on FX Street, I'm dotted around. I've been doing a lot of presentations on that, so you can always watch me. The Trade for a Living course starts on the 16th of January. So very, very important. This is 10 modules of everything you need to know how to trade for a living. I've wrote it. It's all my experience. And again, there's There's a little bit of a forum going on. We can ask each other questions, what's working, what's not working. So a lot of opportunities this year. I think very, very important the ECB didn't change rates in the session today. There's not to say that won't happen in the first quarter. A lot of things are going to happen this year, and a lot of opportunities to make money. So if we approach it in the right way, methodical, and we have our plan, I really think there's good opportunities to make money. And again, I'm here for every step of the way. Check out my Trader Maker site. Just Google Trader Maker. You'll be able to find me and my thoughts and opinions. Always contact me on the email address. I'll give you the benefit of my experience. And again, anything else you'd like to know, just let me know. So any questions, guys, just fire them across. I mean, we've got plenty of time tonight. There's no rush. I'm always mindful that afternoon sessions people might have places to go and jobs to do. Okay, Pete, how many trades have I got on at one time? I generally stick to one trade at a time, to be honest. I don't really hedge. That's not the style of trading that I do. I generally have an opinion, go with a single market, and I add to positions when I'm right. I add to positions when I'm proven to be wrong, but within my trading strategy. So again, you can watch me 2 sessions a month. The next trading session, I'll just tell you now actually, I'll be trading a live trading session at 1 o'clock on the 19th. I'll be trading US consumer sentiment. So you can come and watch me trade that. Again, I trade my own money, so you can watch me, follow me, copy me. Entirely up to you. But my money is always where my mouth is. You know, I'm not a professor that teaches the theory and what the perfect world is. You listen to me because I'll do it, and I'll do it in front of you. So that goes down well. Alright guys, you can see the typing icons. Okay, Pete, do I trade smaller stocks? No, I generally stick to the indices, to be honest. Individual stocks take a lot more research, and they're a lot more specialised. I'm a bigger picture kind of guy, so I'll generally looking at the indices, to be honest. And mainly stocks. I mainly trade stocks. I'll generally trade the S&P for US figures, to be honest. We've had the most success in 11 trades. I'm up over £9,000 roughly. Joshua, any suggestions how you can structure university week to ensure you have a good time to trade? Well, yeah, absolutely, Joshua. If you've, with all the other distractions, yeah, exactly. I remember them days, mate. I remember them well. What I'd say is get your economic calendar out. Look on Bloomberg or Intertrader, and that'll tell you when the big figures are out. So if you know when you're going to have lectures and when you're going to be partying or ushering a girl late out at night, just look for the figures. Trade around big speakers and big economic figures. They're the things that give you the most opportunities. And there'll be 5 figures a month you can trade around. Okay, John, how long generally does your average trade lost from open to close? Lost or last, John? Last. Okay, mate. It all depends on the market conditions. Generally, they take a lot longer than you'd wish. But I can hold a trade for 15 minutes. I can hold a trade for 2 hours. I trade a 15-minute candles. So what I like to do is get the right entry point and then trade a 15-minute candles. So I'll let 4 15-minute candles print, so then I can look at the hourlies. So generally, I stay in a trade for an hour. That's what I do. Because that gives you an indication if you're right or wrong. And usually my entries are good enough that they don't retrace. Okay, the biggest difference between working for yourself as a trader and for a bank is A, as a trader you don't get paid, and B, you trade your own money. So they're the 2 massive differences. Alright, Pete, 15 minutes, yeah, 15-minute candles. So when you look at your charts, you can do 3-minute, 5-minute, 15-minute, 30-minute hourly. I trade a 15-minute candle formations. What percentage do of my account balance I risk in a trade? It depends on the trade, to be honest. Very good question. If I'm not so confident, I'm just like everybody else. I'll trade a smaller percentage. If I'm confident, I'll trade a good percentage. I trade to make money, so I'm quite mercenary. If I'm going to trade, I generally trade bigger size because I'm not frightened of losing it. So I'll trade whatever percentage I feel warrants putting the trade on for a start. If it's worth trading, it's worth trading big. But that's just me. That's just the way I trade. I don't recommend that to everybody. But as long as you have a risk reward and percentage of your capital in mind and you can control it, that's fine. Yeah, I've held trades overnight, John. Yeah, of course. It's something I prefer not to be honest. If the market's moving around 2% a day, that's plenty of money for me, to be honest. I'd rather go to sleep at night and know when I wake up in the morning there's a new fresh day. Holding things overnight is a viable way of trading. A lot of people do it. It's just not for me, to be honest. Okay, Tony, what indicators do I believe are best and most reliable for indicators? Great question, Tony. Bollinger Bands I recommend, and RSI. Your Bollinger Bands are very important because you have a moving average that shows the high and low of the range, and your RSI, volume. Also, volume is very important, which you can't unfortunately get on an InterTrader, but look at the volume. Johnny, did I move for tax for jib reasons? No, I moved to jib before I even knew about trading, to be honest. So no, I didn't. That was just a coincidence, to be honest. Where'd you get volume indicators from? If you can't see them on InterTrader, your best bet is to open a free charting package. I'll Google some and I'll let you know, to be honest. But if you just Google volume, live volume, you'll be able to subscribe to free. It won't be as quick as you'd like it, obviously because it's free. But there are other sites that provide market volume. Just Google volume. What extent do I rate MACD as an indicator? Well, John, I rate it as much as anything else. If it's working for me and it's making me money, I love it. I'll recommend it to anybody. When it's not, I don't. To be honest, there's no everyone's looking for the perfect screen setup. Everyone's looking for the perfect indicators. It just doesn't happen, to be honest. Things change, markets change, correlations change, so you can't rely on any one indicator. What I'd say to you is find out what works for you and keep your graph simple. That's all I can say. And at one point, I went crazy. I had 10 screens, Bloomberg, Reuters, every graph conceivable. I didn't even know what I was doing. There was so much to look at, it was ridiculous. So I stripped it back. I put on my moving average, the Bollinger Bands, my RSI, and my trend levels. Yeah, and that's what I traded off. Went off with 5 minutes for entry, with 15 minutes to know I was right, and with dailies and hourlies to kind of look for really good exit and entry points. More exit points, should I say, really. And that's what I worked off. And that's what worked for me. Where do I see gold moving next week? Gold's a contentious one. I don't see there's any more certainty in the world, so gold will continue to go up until it doesn't, and then it will come down. The big thing I like to say quite often is when you see gold on Japanese streets in vending machines, you know that gold's overbought. You know that gold's a commodity that people are holding on to, and at some point it won't be worth as much as it was. So I would say that gold over the next few weeks will continue to go up, but I don't know how much, and I can't also guarantee that. I don't give financial advice, to be honest. But the trend is up. We can't get away from that. When the trend changes, it's going to fall hard, and it's going to fall fast. Alright guys, well I've still got your attention. Let me just put an instant poll up just to check how you found tonight. Again, I write these seminars and produce these seminars for you guys. I hope you find it interesting, informative. Again, I'm not a professor. I'm a real trader from a real trading background, so hopefully some of these techniques, some of these things you'll find of use to you. Again, if you find me or Google me on FX Street, you'll be able to find me. You can find my website. You can contact me through my email address that's on your screen. And again, any questions you do have, feel free to ask me. It doesn't matter what it's about in regards to trading. I'll always give my honest opinion, which is quite different from people in government and these so-called expert trading sites. Alright guys, well that's been a great session. I really appreciate the questions you've asked. There's been some great questions. So, Johnny, Pete, and John, and Tony, absolutely great questions. I'm really impressed by that. It shows you guys are thinking. So anything else you'd like to ask me, please send through the email and I'll get back to you. Yeah, John, sorry, yeah. I'll type that in now. fxstreet.com. It's a well-known forex site, so I do a lot of presentations on that. Again, if you Google Trader Maker, you'll be able to find me. And again, you've got my email address, guys. So if you do get stuck or you want to ask me any questions, just fire away. You know, I'm here for you guys. I mean, I'm the real deal. I've been there, I've done it, and there's nothing you can ask me that's too trivial or too in depth. All right, guys. That's been an absolute pleasure tonight. I've really enjoyed tonight. So I hope to see you all very, very soon. Keep tuning to Omnovia and the link so you can see what happens. And I'll speak to you all very soon. All right. Good night, guys.